Hey guys, what's going on? It's Jason here. Today I'm bringing you guys an update on GME and why I think GME could go higher from today, even though today wasn't the best day for the stock market overall. Today's video is sponsored by the like button. If you guys hit that like button below, it'd be super awesome. If you're not a sub, hit the sub button and we'll get right into it. If you're wondering what I'm using here, I am using Webull. That's what the chart system I'm using. If you guys want to open up a Webull account, put $100 in and get 2 free stocks, there's a link in the description below. Well, today, it wasn't the best day, obviously. It was a rough day, ups and downs, every which direction. As you can tell, though, judging by my left corner of the screen right here, pretty much every stock today was in the red. And that right there definitely fed off into AMC. It also fed off into GME and other hype stocks. So GME and AMC had a rough day today. Honestly, it actually did pretty fair compared to other stocks in terms of like the falling numbers, right? As you can see, GME, overall from yesterday ended up plus 18% at $108 where it ended today. Currently, it's at $103, though. This morning in the pre-market, we started off about $140. Worked our way up into market hours this morning, and then we just plummeted. Now you're thinking, why did that happen? Why did the market go down today? I'm going to give you the simplest answer, and that is Treasury bonds. The 10-year Treasury bond today, 1.6%. And I know you're going to ask, like, why does that even matter? What's Treasury bonds matter? Obviously, they do matter a lot. Once Treasury bonds, 1.5% usually. For a 10-year Treasury bond, people start taking money out of the stock market and they start buying these bonds up. The reason why the bonds are so high right now is because people don't really want to buy bonds a lot. So it kind of drives the price up. When you do these recovery bills, they have to get money from places, and a lot of that money sometimes comes from Treasury bonds. These Treasury bonds numbers have been going up because a lot of people don't want to buy Treasury bonds because they're like, hey, look, we can make a lot more money in the stock market. Well, the Treasury bond, you can make risk-free pretty much. Everything has a risk, but it's very minimum risk, risk-free money from a Treasury bond because it's backed by the United States government. So these companies are like, hey, why would we put money in the stock market when we can make for sure money out of these bonds, especially when we push the price up by not buying these bonds over time. Well, that right there again today was rough on the market. During market hours, we actually got up to $184.64. That quickly, though, ran down towards the end of the day once the news of Treasury bonds came out at the 1.6% rate. I think at one point somebody said it was like 1.65. Pretty big for a 10-year Treasury bond. That shot us all the way down to $103. Now, I know you're going to ask, like, obviously, how did AMC do? If you haven't seen AMC today, pretty much the same, right? End of the day, right now it's at $7.55, 56 cents. It was rough. It was a rough day for the market overall. I mean, there's Neo, even Riot was down, right? This is the market today, right? You just go through the thing. Even CCIV down today. Everything was down. Disney today down. Race all of its gains. Foresight down. Look at that, $6.15. Right? You got Apple down. Every stock was down today. It was not a pretty day. I'm hoping tomorrow we can see some resurgence. I'm hoping tomorrow that we can. Hopefully the market's not as red, and that will equal a better day. Again, I think the market being down today with the Treasury rate news and inflation numbers being higher, hopefully tomorrow will kind of level off. People will get level-headed again, and the market will start to rise again. Because with the market being very red, just even though this is a hype stock and doesn't go with the market overall, sometimes, and it's hard to overcome the market as a whole. And today was one of those days. We plummeted. Went from $200 yesterday in aftermarket hours to $103 today in aftermarket hours. Now, that doesn't mean that this thing's over by a long shot. This thing can shoot back up at any time. Again, right now it's down because the market as a whole is down. Now, let's remember what I was talking about, why I think what could help GameStop as well with a boost right now, right? Well, there's an article today that came out from Citron Research. You guys, if you've been in my channel, you guys know I talk about Gamble a lot. I think Gamble is a very undervalued stock. It's an esports betting company called Esports Entertainment Group. They also own sportsnation.com for sports betting, football, baseball, hockey, whatever, you name it, you call it, they have it on there. Now, they do have another side of that called, it's Gamble, obviously. It's the esports side. Esports is a growing thing in all over the world. And so is the gambling side of that. Now, Citron is calling for GME to buy Gamble. Gamble, again, we've been talking about it in my channel since it's about $5, a little bit under $5. Right now, it's at $20. I think it's a little bit under 20, like $19. We've been talking about it for a while. I like Gamble. It's a safe bet compared to some of the other ones because if you look at, say, DraftKings or Skills, they're trading at 20 to 30 times their revenue compared to Gamble, which is trading about 6 times its revenue. So that means there's a lot of growth and a lot of room to grow for Gamble compared to Skills and compared to, say, DraftKings. This article says GameStop GME stocks is up again as traders investors have adopted this company as a trading vehicle. We have learned from the past 4 months in GME are 2 easy takeaways. People love video games and people love gambling, which is pretty true. So now, in order for GME to maintain a higher share price, they must change their narrative now. There is one way for GME to seamlessly both pivot away from its secular declining retail business and monetize to its customers' database. And that answer is acquire Esports Entertainment Group, Gamble. Now, this would be big if that's happened. It would really, I think it would help out. It would help out GameStop a lot. It could also help out Gamble too. As noted by Ryan Cohen, one of GME's most valuable assets in his company's large customer base and 55 million power-up members. Instead of selling these people low-margin hardware and video games, GME should become the software and, more important, the betting platform for their gamers to compete in and bet on esports. Citron urges GameStop, listen to your customers are telling you and embrace it. Bill Gates likens the GameStop frenzy to gambling, and the Wall Street Journal comments, teens are gambling their savings on GameStop stock. The GameStop surge was just one of the ways Americans have renewed their love for gambling. GME needs to give their customers list a platform to gamble on video games. Esports is growing. Esports gambling is growing. Gambling itself is already breaking numbers in terms of revenue. Remember, they do esports. They also do Sports Nation as well. They've also bought out Sports Nation. Gamble is the first esports betting company listed on the NASDAQ. Remember, it's the first one listed. Gamble is led by a strong management team of industry veterans, including CEO Grant Johnson, who has been in the online gaming gambling industry since 1990s. What is unique about Gamble is that they are only vertically integrated esports betting platform in the stock market today. By buying Gamble, GameStop would immediately add 2 million unique gamers to its platform, add over 1,000 connected locations, add state-of-the-art analytic platforms. Helix Esports owns 2 of the 5 largest esports entertainment centers in the US, add safe and regulated player versus player wagering opportunities with Helix LandDuel platform, which is in a pilot program with the New Jersey Department of Gaming Enforcement. GG Circuit provides the best-in-class enterprise software solutions to the esports industry. Now, that there alone just adds a lot of value to not only GameStop, but also would add value to Gamble as well. Gambling on esports doubled to $14 billion in 2020, and GameStop needs their share. A combination with Gamble would change their narrative. As noted by DKMG Management, esports betting is on the cusp of exponential growth. We think once we feel like it's time to focus more profit effort on expanding beyond the exploding sports betting and iGaming market, what are the next areas? And one that really stood out was esports. Esports went from pretty much a tiny, almost negligible product to a very large product. For us, post overnight. And that was from CEO Jason Robbins. Because it's tracked digitally, we're able to really understand, like, for example, we knew the esports grew 50 times in entries and 20 times in audience during the pandemic from last year. But it's huge growth, big vertical growth, big up growth for Gamble. GameStop needs to adopt the story of Gamble and work together to build out the largest vertically integrated esports business in the world. As a short seller, that's a story that we would not bet against. Even in its current elevated GME valuation at the time of its publication, there's too much blue sky. What separates GMBL from the competitors and makes it a perfect asset for GameStop is LandDuel, player versus player wagering platform built in Unity that allows the skill-based wagering on third-party video games. You're not just betting on esports teams, you're betting on yourself. LandDuel consumer-facing application enforces strict 4-factor authentication to ensure that fair play and ID verification. LandDuel also has the relationships with several major game publishers to ensure the events of the wagers are following community guidelines. LandDuel is working alongside the New Jersey Department of Gaming to enforce a pilot program. This is a chart of the business strategy of Gamble. If you change the headline company to GameStop, there is no reason this cannot be a $5 billion company. This right here shows you everything. You can look at that as well. It's crazy, man, because again, you know, I feel like GameStop is just a little bit away, man, from reinventing itself and doing something great. And this right here could definitely be it. Valuations, this is what I was talking about again right here. Despite the massive opportunity ahead of Gamble and the potential for a takeout, the stock trades at a fully diluted market cap of less than 400 million, or just 5 to 6 times projected fiscal 2022 revenue of $70 million, while the industry peers Skills and DNK traded at 30 to 20 times respectively. So they're trading at 5 to 6 times, Gamble is, whereas Skills and DNKNG is trading at 30 to 20 times its revenues, which is crazy to think about. That means there's so much room to grow for Gamble, right? Again, we've been talking about Gamble in my stream since about $4.50. Shout out to anybody who's been hitting it out of the park on that one with us. To put things in perspective, if Gamble traded in line with Skills, the stock would be close to $100. If Gamble traded in a line with DKNG, the stock would be $65. Therefore, a required could easily pay $50 to acquire Gamble. Back on the subject of GME and where this thing could go, in retrospect, if the market is great tomorrow, we could literally see GameStop bubble back up to say 150, 200 bucks again. I don't think this thing's over by a long shot. Same thing with AMC. I think right now the market is dragged everything down with it, and these treasury rate bonds and inflation numbers are hurting us bad right now. One way that GameStop could stop a lot of this, though, is by buying Gamble, and could help its long-term longevity be even better. If you guys like this video, make sure you guys hit the thumbs up below. If you could, hit the sub button, and I'll see you guys in the next one.